Let's take a look on how the gold prices are trading. We've seen $1,800 breach on the higher side yet again. Prices have continued to be high on the safe haven buying, high inflation in the international markets. All of that has been supportive. $22 up right now. 1810 is how it's holding in the international markets. Let's also go across to World Gold Council's investments, and we are joined by Marcus Hub there. Marcus, hi. How would you explain the fact that despite continuing geopolitical and economic uncertainty, investment demand was down 37% year-on-year basis?
Yes, well, Q2 was an unusual quarter. In fact, as you see, demand in tonnage terms actually fell, and that was driven largely by a decline in investment demand from the ETFs. Now remember, this was a quarter where the gold price initially was strong, it then fell back in the middle, and then it rose again towards the end of the quarter.
Marcus, what are your expectations for investment demand for the rest of 2011, especially in the terms of ETFs?
Well, that's the interesting thing. I'd say the first interesting point to bear in mind with this quarter was, despite that, you still saw the gold price rise by about 6% over the quarter, and you saw every other category of demand was up: jewelry, technology, central banks. So it was only the ETF figure that brought the total demand down in Q2. And since then, we've actually seen ETF demand rise into Q3, largely because of the sovereign debt problems in Europe and also the debt downgrade in the United States.
While investment demand has declined, physical demand, including jewelry and technology, is up. What were the driving factors behind this increase, especially given the high prices, Marcus?
Absolutely. Bar and coin demand, again, was a little soft in this quarter, but the anecdotal evidence is with the renewed problems in Europe in Q3 and the debt downgrade in the US, you've seen big bar and coin numbers again, especially in Europe, but also in India and China. So we do expect to see an even stronger quarter in Q3 with investment bouncing back again.